Good afternoon, everybody, and welcome back to the Fintech Nexus weekly news show. My name is Peter Renton, chairman and co-founder of Fintech Nexus, joined as always from his Long Island home office, Todd Anderson. How are you doing, Todd?
I'm well, Peter. How are you?
Doing great.
From your Denver studio?
Yes, in the Denver studio today. And joining us for the first time, we have Rex Salisbury from Cambrian. What do you call Cambrian Ventures? Is that
Cambrian Ventures? Yeah, Cambrian Ventures, either one.
Why don't you just give us a quick 20-second intro about what you guys do?
Yeah, absolutely. So I'm a solo GP. So what we do is basically what I do, and that's investing in pre-seed and seed fintech companies in the U.S. And then I also operate Cambrian, the community as well. So I have a newsletter subscriber base of about 20,000 folks. I also have a Slack community of 1,700 plus fintech founders. And prior to starting this fund, which I launched in, January of 2022, I helped start the fintech practice at Andreessen Horowitz. And I was there for just over 2 years. And then before that, was doing software engineering in fintech. And at one point in time in a past life was also an investment banker, but now focused exclusively on investing some of the best and most interesting founders working on building the next generation of great fintech companies when it's just basically two people. Right. I'm working on doing a deal right now, and it's two people, and they're literally getting the incorporation docs together. So it's actually kind of mostly one person, and they're like finalizing the second person. So very early. I also do seed, so sometimes that'll be you know at that point 8 to 10 people doing revenue product, but I love doing the early stuff and leveraging my network and relationships to help folks hopefully build better things faster.
Yeah, and it is a great community that you've built there, Rex. So let's kick it off. We have lots of news to cover this week. We're going to kick it off with Plaid, which announced this morning a new product called Plaid Transfer, and this is all about account-to-account payments. And it's basically what it's doing is it's going to be using RTP, real-time payments. That's the payments rail that covers about 60 to 70% of US bank accounts. I think it's from memory like 100 plus banks are in that consortium. So it's basically taking out if you want to you're a fintech or even a non-fintech and you want to move money between bank accounts. Plaid has now an offering that will do it in real time, and it uses RTP. If it can't use RTP, it will use same day ACH. It's a really cool product. Account to account payments, big in other countries, not so much big here, but this is feels like this is a trend that's been happening this year with lots of developments in this space. What are your thoughts, Todd?
Yeah, I mean, I'd say, payment is probably, if not the most exciting, one of the top 3 most exciting areas right now. You have FedNow coming. Mm-hmm. You have Plaid launching, this product. Our next story will go into interoperability. So to me, I think it's fascinating to see, all these different payment mechanisms or networks begin to, get these products out in the hands of, fintech companies and others. Because ultimately the way in which payments have been done, especially here in the States, is just way too slow. And waiting for something to settle 5 days later, I think those days are soon coming to an end. And I hope the paper check comes to an end as well. But we should, at this point, we should be able to send money and settle it in near real time, or at least within the same day.
Yeah. Rex, what do you think?
Yeah, I think it's super interesting too. As you pointed out, the U.S. was the first country to develop a lot of really interesting banking technology. That was back in like the 1970s.
Exactly.
And then we kind of stopped. And places like Europe with account-to-account payments, or Brazil with Pix, or India with UPI have all these great ways of doing basically instant settlement or instant transfers 24/7, 365. And the US is way behind. We've got the RTP network that the clearinghouse runs that's been up and live. We've got FedNow going live later this summer. But we've got all this old cruddy infrastructure. And so even though we now have these new networks, you kind of need layers on top of the networks to make them more accessible. Right. And what's cool about what Plaid does is they already have a huge install base. There are a tremendous number of fintech companies already use them for some of their other products they use. And they can basically now leverage that network infrastructure connectivity. Oh, by the way, when you have data connectivity to a bank account, you can also do lots of things around risk assessment. How old is this account? How much money is the account? You have all this functionality you can rely on to also start to layer in the payment mechanism. And so it is account to account, but it is payout. So it's not peer to peer. So that's something to call out here. Like the first use case that I think they announced is for someone doing EWA play, so earned wage access, allowing them to go and push an hourly worker's earnings directly to their account in real time after they finish a shift. This is not completely new functionality, right? Because you used to be able to do this push to card payments, but that's different. Like you have to have a card. It doesn't feel the same as having the money actually show up in your account necessarily. There also are more fees associated with it, although I don't know exactly what the pricing is going to be for Plaid. I'm sure they'll have their own fee on top of the underlying protocols. But that's usually been like 1%. And Square was someone who pioneered a lot of the original push to card, but now a lot of people do it. So I think it's great to see more instant payments coming to the US in a whole variety of ways. And it'll be interesting to see the extent to which this benefits net new companies, whether it benefits these at scale fintech players like Plaid, or whether some of these networks start to benefit maybe some of the incumbents in certain ways. And it's possible it's all of the above, but just to different degrees.
Yeah, and plus just moving money around quicker, I think, is going to be such a benefit for the economy at large. It's about time. I mean, like I've said before, I mean, I have an Australian bank account. I've had it for 30 plus years, and I was able to send money instantly. I don't know what it was. It was probably 18, 20 years ago was when I would do that, just send money instantly, 24/7. And it's been, it's just taken forever to come up.
The interesting thing though is like,
why not stay in Australia? Great country, sunny beaches, fast payments.
There's lots of opportunity here in the US.
Yeah. Well, like there are businesses that rely on the slow payment though. And that those incentives, like, the big payroll companies, for example, that make the interest income, like some of that is eventually going to come to an end. I'm curious to see how that plays out, because they do rely on
business model shifts.
Yeah, exactly.
So you mentioned the payroll companies, but I actually think the bigger group to talk about is banks. We just had SVB collapse. One of the reasons they collapsed is we now live in an era where you have they had a very network deposit base of startup founders, but they were all able to basically effect transfers from their phone. And so how quickly you could have a bank run. And now they're doing it mostly via wires. Wires have been around for a long time, but the ability of money to move faster any time of day, that's going to have real meaningful implications for what it means for a bank to have a relationship and a customer if money can transfer in and out of it instantly anytime. And that's not just like startup customers who are parking maybe $10 million from their several previous round of financing. That could be consumers who have small balances who now, if they can actually move money around more quickly, like how they choose to bank, where they choose to bank, what relationships they have will change. And the reliability and stability of deposits, maybe it's the same. Maybe everyone still keeps all their money at Bank of America. Maybe not. Maybe they just start moving all of it into yield seeking accounts, which means deposit base as a low cost of funding that you can rely on for decades in the US. Maybe that starts to go away. It definitely went away for high balance, cash rich startups, and that precipitated the collapse of SVB. But there's a world in which lots of people start pursuing yield, and they're more able to access it because, if I've got $1,000 sitting in my personal checking account, and it takes 3 to 5 days for me to send it to another account that gets a higher yield, and then I have to transfer it back, and I have to pay rent, and I might have I'm not going to do it.
Right.
But if I can move it instantly anytime, or maybe even have like a rule or an alert or some sort of automation that prevents the overdraft, I'm not going to stick for anyone. It's like, why would I give up $50? And that's right. And so, but that's not been available before.
Yeah.
And so there are about 20 trillion deposits in the country. The average interest rate paid on them is about 40 basis points.
Right.
The risk-free rate of return right now, where government treasuries are, is like 4.5%. And so there are hundreds of billions of dollars that are being basically used as a way to subsidize banks and their deposit base, or through their deposit bases. And a part of the reason deposits don't move is because money movement is slow. And so if money movement starts picking up, that can really change how you start to think about who owns what relationships and then where value accrues in the financial services ecosystem.
Yep.
Okay, let's move on.
Sorry, that was a bit of a
That's all right.
longer thing. Just talking about Plaid's account to account thing.
That's totally fine. So we're going to talk about Visa now.
Yeah.
Todd alluded to it. We're talking about peer-to-peer payments. Visa announced this week this new product called Visa Plus. And what the big sort of hook here is PayPal users can pay Venmo users, which is kind of crazy. This hasn't ever happened before since they're basically the same company.
Yeah.
But you literally have not been able to. I went back and double checked. I looked all through Venmo to see whether I could pay a PayPal account. You can't do it. So now you'll be able to do it through Visa, where you'll create a new handle. They're also connecting like Western Union and Daily Pay and a couple others. No Visa card required. It's going to launch later this year. I mean, this is the start. I mean, I feel like I think this is a smart move from Visa. I'd love to get your guys' take, because it's really entering the peer-to-peer payment space where they earn nothing. It's really outside the Visa ecosystem and putting a flag in the ground. What do you think, Todd?
Yeah, I mean, Visa has been known as one of the most profitable companies in the world. So you think they have some play here that envision something down the line, even if they don't quote unquote earn something here. I mean, I think the big question for me with a lot of different payment questions are, there have been these little either groups or consortiums kind of creating their own mini payment networks. And someone's got to eventually connect the different payment networks. And I think Visa's maybe starting to make a play at that, and the interoperability of things, because you have Apple, we've talked about many times, kind of keeping people in the Apple ecosystem, the Block ecosystem. And so I think this is maybe where their heads are, is how do we as a company begin to connect the various things? Because people are eating away at their interchange model in a variety of ways, buy now, pay later, and others.
What we just talked about.
Yeah, exactly. And Plaid. And so I think they need to think of different ways to get into the various systems, even if they don't see a direct link to revenue or making money on it right now. I'm sure there's some path in their minds.
Mm-hmm. Rex?
This reminds me of one of my favorite comics, XKCD, on how standards proliferate. I don't know if anyone else reads XKCD, but it's a great comic. And basically, there's this. The comic goes like this: it's like there are 14 competing standards, and then there's a stick figure. Stick figure says, "This is ridiculous. Like we can't have 14 standards. We need to have a universal standard." And someone else like, "Yeah." And then the situation evolves to now there are 15 standards, none of which are right. And so that's not quite true here, because what you have going on is you have all of these peer-to-peer payment networks that are growing and scaling. And then Visa comes along and is like, I'm not actually going to be a payment network. I'm going to allow interoperability, right? So it's not like a new standard so much as a meta standard connecting these ecosystems. I think that is something that should come along and would like to exist. Visa probably has the best chance of trying to create something like that. They're a global scale payment network that also has good brand recognition, distribution to banks, all those other sort of things. But there are other people who might also want to control that sort of thing. Maybe it's an Apple, maybe it's a Google, maybe it's something that the banks want to create themselves because they don't want to cede more power to Visa. I mean, they kind of have that already in Zelle, but Zelle would maybe be one of these connectivities. So there's going to be a lot of dynamics about which of these peer-to-peer networks are interested in trying to connect to the other networks. Because one of the big advantages these companies have paid a lot of money to build is having lots of people in their network and hoping that gives them like defensibility. And now if you can transact between networks frictionlessly, some people probably aren't going to be happy with that. And so I think if anyone has a good shot of doing it, it's probably Visa, but it's by no means given that they're just going to run away with the market. So
yeah, I mean, if they had launched with, and we have Zelle and we have Cash App, then it's game over. Right, but that hasn't happened, and we'll see how they can bring that to fruition. So, anyway, I want to talk about fundraising, and Rex, this sort of came out of your tweet this morning that we had as our tweet of the day in our newsletter, talking about Q1 deals and how in fintech, it's been trending certainly down from the last couple of years, not unexpected. But I want to get, Rex, I'd love to get your perspective because, you work in the early stage, and this was sort of, all of this is all of fintech in the trial. We looked at Track XN. There was an article in Crowdfund Insider. But what are you seeing? What are the data that you've been looking at show you about Q1 activity?
Yeah, so I think people here, venture has fallen off a cliff, and that's true, but it's also misses a very critical part of the ecosystem, and that's very, very early stage. So if you're looking at Series B rounds, the number of Series B round, and a Series B, for folks who aren't maybe as intimately familiar with that, would look like, that's usually a company that's 3 to 5 or even maybe 3 to 5 years old, or maybe even a bit older than that. That's doing, you raise your Series B, you've probably gone from doing a few $1 billion in revenue to maybe 10-ish or maybe a little bit more. So these are pretty big companies a little bit later in their life cycle. The number of companies that are out there raising fresh Series Bs, that's at kind of like 2010 levels. And remember, back in 2010, the venture ecosystem was literally a tenth the size that it is today. So in 2012, about $20 billion was deployed in US venture. In 2022, $200 billion was deployed in the US in venture. And so not only are you having an incredible reduction in the number of deals, this is when the universe of companies out there that would have gone out to raise a B is a lot larger. So very true that at the late stage, there is a lot less activity going on. If you go to Series C, D, you look at IPOs, for example, even bigger drop off. Right. But the converse side of that is there's stuff earlier than Series Bs. They're especially at the pre-seed and the seed. So these are usually net new companies or companies that, now are kind of 12 months ish into their life. They're freshly capitalized at more reasonable valuations. And there is a lot of activity happening there. And so this chart that you're referencing that I tweeted shows that there is, from a deal activity perspective at the pre-seed and seed, we're basically at the same or greater levels than we were in 2018, 2019, and 2020, even a lot of 2021. It's really just a few quarters of 2022 where there is a higher number of deals being done at the pre-seed and seed than there are today. And so and I attribute that to the fact that venture and company creation is in part about the talent network and ecosystem, and the employment base within venture or within the tech ecosystem has exploded. And you still have a lot of really talented individuals with great insights into the type of companies they might want to build. And I would argue the universe of potential opportunity for things to build is very, very large. And the fundamental constraint is usually not that there's like a limited number of ideas, but that there are a limited number of people with the right skill set to pursue those ideas. And given that we have a huge talent pool of really qualified people, right? Like you might have been at a Plaid, a Stripe, a Visa, and like done 2 or 3 tours of duty across a whole bunch of companies. I think it's great that we have as many companies being formed right now as ever. And so there's a lot of activity, and it keeps me very busy. I know I've been busier than I ever have in my career in terms of the number of really great founders I'm seeing.
That's good to hear. Todd, any thoughts?
I mean, it feels like, the post-pandemic kind of next wave of fintech is starting to really take off as the later stage companies have gotten less capital. It feels as if there's now a nice cycle of earlier stage companies, as Rex alluded to, that maybe we'll see the next Plaid, the next Stripe, whatever, in slightly different ways sometime in the next 5 to 10 years. I mean, I've been waiting for at least that post-pandemic. Where's that next evolution of fintech going? And I think maybe we're starting to see it, where Rex invests and others obviously invest in the early stage companies. And over the next 5 years, we'll start to kind of see those ideas evolve into legitimate, scaled, and failed companies.
And this isn't just a tech phenomenon either. There's the business application statistics that's reported through FRED, which is data gathered by the federal government and reported out publicly. Prior to the pandemic, there's about 280,000 businesses being formed every year. Pandemic hits, a lot of people lose their jobs, and so they have no opportunity but to start something. So that number doubled to north of 500,000. I was like, oh, that's just a temporary thing. It's just like people don't have a choice. They have to do stuff. They're going to start new businesses. But what's crazy is in the 2 years since the pandemic, that has remained permanently elevated at over $400,000 or 400,000 annualized applications for new businesses, which is like, call it 80% higher than it was pre-pandemic. So this is across the whole economy. There is a huge rate of increase of business formations. And I don't really understand what's driving that. Like, I thought it was going to be transitory and then we kind of go back to our trend line. But if you look at the data, it's just like a new permanently elevated trend line that's been running for 24 months. And that's kind of crazy.
Yeah, well, it'll be interesting to see how long it lasts, but it's certainly not showing any signs of slowing down. So anyway, moving on, I want to talk about the head of the CFPB, Rohit Chopra. He was interviewed by the Washington Post this week, talking about the banking crisis and a whole bunch of other things. And he had some interesting things to say. He basically said that there should be some automatic triggers that are built in when when you have like maybe even capping the amount of uninsured deposits that banks can actually hold. He also said that there's authorities that congressional authority that was provided by Dodd-Frank has not been implemented yet. He talked about obviously the 1033 open banking piece, but one of the things that I think is really interesting is that he, talking about increasing the 250K limit, but using it for bank accounts that do payroll. So a business bank account that does payroll, that should be, we don't want that to kind of just go bust with a bank when just before a payroll run. So increasing the deposits on those kinds of accounts. So that was really interesting. What do you think, Todd?
Well, I think, his mandate is the consumer.
Right.
And so a lot of his comments are colored through consumer protection, which is exactly what the CFPB was created for. I think there's some interesting ideas in there, especially the payroll one. And I just it's funny, before this I was interviewing some of my podcasts who does payroll and same day payroll, and so I think there's a lot that still needed to be done in that space, but I think the automatic triggers and stuff, some of this, the correspondence between the Fed and SVB, like, that existed. There maybe we just make it more transparent. There was people looking at this and there was exchanges back and forth. Ultimately, it got to the point where it got to, but it's not like everyone was asleep at the switch. Mm-hmm. Even I think on our podcast, on our webinar that we had right after SVB, like, I forget who it was from Claros who said, if you look in the footnotes, you can see all the exposure. Like, maybe we just make this a bit more transparent and in front of your face, and maybe something like this doesn't happen. I don't know. I feel like they stopped it fairly quickly, and SVB was more of an outlier than it was a symptom of the entire system. But
yeah, Rex, what do you think?
Yeah, this is a longer conversation about how you make banking safer and prevent runs, because that's really what he's trying to do. Or in the case that there are runs, making sure that they don't have systemic consequences. So in that piece, he also says, you know what, it's okay if like smaller banks fail. That's fine. But it's problematic when the big ones fail. But even for smaller ones, like, the thing we don't want is for anyone to ever miss payroll. And so it makes sense that why you would carve that out as a particular area for prospective protection. But the other thing that's happening right now is that people are learning there are ways to keep your money safe that actually don't require, well, some of them are basically hacky approaches to increasing your FDIC insurance coverages. So IntraFi is a reciprocal depository network. All that means is you put your money into one account, and then that bank has a bunch of, IntraFi manages it and they're the network, but your money gets pushed out to a bunch of other banks. At no bank does it exceed $250,000. Boom, you have effectively unlimited FDIC insurance coverage. And the existing regime can cover that. You could make it a little bit cleaner in some sense by obviating the need for the network by increasing the coverage and having the FDIC step in to do that. And maybe that reduces the needs for these depository networks. Another thing that people are doing is not just adopting these networks like IntraFi, there are also some other ones like TDS, Total Deposit Solutions, Stonecastle. There's a new one my prior employer, A16Z, invested in, called ModernFi. So deposit networks are one thing. Another thing a lot of people are doing is they're basically putting their money directly in government treasuries, which you can do now. You can put it into a money market mutual fund. You can buy treasuries directly. Then you have direct connectivity to the full faith and credit of the federal government. And so arguably, like, you don't need to do anything here. People now have the tools they want to affect how to protect their money. And anytime you get involved more, you're probably going to create some other sort of unintended consequence.
Feels like it, the byproduct of what happened was that people became more aware of kind of how some of this works, and that way more aware of some of the other solutions that already existed.
Yeah. I think ironically, a lot of people were saying, don't bail out SVB. It's going to create moral hazard, which is not an unreasonable potential objection. It's like, oh, people are just used to the fact that now their money is safe and every bank. But I think most people actually looked at it like, oh my God, my money is not safe. And they have taken very real actions to try. So moral hazard hasn't played out in reality, although it seemed theoretically like it would be a thing.
Exactly. So anyway, I want to move on and talk about Paze. Remember Paze, P-A-Z-E. This is the digital wallet from Early Warning Services that is supposed to be competing with Apple Pay and Google Pay. Well, we talked about it 2 weeks ago when it was first announced. Now there's been some more details that have been shared. There was a good article in Financial Brand this week that really shed some light on some of the question marks that we had, talking about how Paze is not actually going to compete with Apple Pay and Google Pay, not directly. It's focusing on just e-commerce, because you're on your phone, you go to a website and you want to buy something, and you sort of it's still some friction there in entering in your details, credit card numbers. Sometimes they have Apple Pay, but they're talking about using Paze there as the main use case, where the merchants will have the customer's email, billing address, and there'll be much less having to be typed in. But obviously the challenge is going to be, and this Paze is basically the 7 biggest banks, 150 million credit cards, all preloaded. There's not going to be an app. That's one thing I found out. It's all going to be done through your credit card, but it's the challenge they have is they got to sign up merchants one by one. And that's kind of what that buy now, pay later guys have done, and they've had a 8-year head start on Paze. So love to hear your guys' thoughts. Todd?
Yeah, I mean, at least there's it felt like when they first launched, there was like this feeling as if it was just another wallet, and how are they going to compete with Apple or whoever? At least the details give it a better sense of direction. It feels like they're competing more with, like, when you add your details and Google Chrome saves your card. It feels like they're kind of competing more with that than anything else, because now if my card's saved in my browser, I go around and I just click and use it, and so it feels like that's where they're trying to go after. Like we talked about with Shevlin a few weeks ago, it feels like a hard slog, but there's a reason why the top banks are involved in something. I don't think that we necessarily know the path they're going to end up in. And I'm curious to see how this goes, because if it's a big flop, that's a pretty big egg on their face. So I'm very interested to see kind of where this ends up.
Mm-hmm. Rex, what do you think?
Yeah, I haven't really dug into Paze, so I don't really understand what it is or how it works. Also, EWS owns Zelle, which is the peer-to-peer, and then you can also do business to consumer and consumer to business payments through Zelle. And in April last year, some banks were thinking about using Zelle as a retail payments alternative, so you could use Zelle at checkouts. I don't know what's happened to that, and so
I think that's become Paze.
Yeah.
Okay. So that is now the new. But now you have two, even if it's a great idea, now you have two brands that are competing in the consumer's mind. And so it's like, what pay with Paze? What is Paze? Whereas Zelle at least now has, I don't know if they have more accounts. They have higher transaction volume, but I think they have lower accounts than.
But I don't even know if that many people know they're using Zelle, because it's directly in their bank app. And so I think I'm not even sure the name recognition, like, oh, I Zelled you money.
Yeah.
I think it's more, my bank app.
Well, you know what really won't help with name recognition? 2 names that you don't know.
Exactly.
That's true.
They probably should have just called it Zelle
Pay
Wallet.
Or Zelle Pay.
Yeah. Okay. One last quick one I want to get to. And And this, this is the crypto story about Ethereum. The update went smoothly. This was something that, as we talk about the Shanghai Chapella, some people call it the update, that basically allowing staked ETH now to be withdrawn. The whole idea was that people wondered whether everyone was just going to start taking out their staked ETH, and that hasn't happened. ETH has actually hit a 9-month high after this piece has happened. So looks like it's been another win for the ETH crowd. Todd, what do you think?
Yeah, I don't know. I mean, it feels like there was just so much momentum in the space, and that momentum has just been, destroyed by the last 8
Oh man,
10
up
months.
80% year to date for Bitcoin.
Yes, but I feel like what needs to happen is a slow, quiet momentum for a while in the entire crypto area, and that way in a few years time it's settled out, it gets rid of some of the crap that's still in the system, and then but I don't know really what this means overall for crypto, and I think the enthusiast is happy.
Yep. Rex, any thoughts?
Yeah, on crypto, I mean, I certainly am one of the people who does not spend as much time thinking about I used to spend a lot of time thinking about connectivity between the ecosystems, but especially because I'm focused at the very early stage of investing. When you do have a big freeze, it just makes it hard for very early stage companies to get early traction. So it's not that I'm not negative on the category. It's just, it's a harder area for me to go and get excited about for those connective pieces of infrastructure when I see so many other really interesting companies that are outside of that space. So part of it is just a time efficiency standpoint, because I see so many people building things in financial services that aren't crypto related that are very, very interesting. I do think one thing that's interesting to track, and maybe plug my A16Z, something they released recently, which is the State of Crypto Index. And so they have some great data tracking all sorts of different kinds of ways in which the crypto ecosystem is or isn't active. I think that easiest way some people will track is like, oh, what is the price of Bitcoin? And that's correlated with a lot of what we're talking about. But actually, one of my favorite ways to think about adoption is, you talk about transacting users in certain use cases, which they have some of those numbers. But I think a lot about ecosystems and talent. And one of the most interesting things they track is the number of developers who are actively engaged in building publicly in crypto. And that is correlated with the price of Bitcoin. But even as Bitcoin has gone back up, that continues to go down. So they had it at a high in March of 2022 at 37,000 active developers, and that's fallen to about 28,000. So call it, 25%-ish decline in 2023, which is obviously not nearly as much of a decline as the overall price, but it hasn't started to tick back up yet.
Yep. Okay. Well, anyway, we have gone over time. We have to leave it there. Rex, thanks so much for coming on the show. Todd, always
thanks, Rex.
Always great to have you. Quick plug before we go. Fintech Nexus USA happening in New York, May 10th and 11th. Tickets are on sale. Discounted pricing ends next Friday, so you've got to get your ticket.
That's right.
Bought very soon to get a discount. With that, I will wish you all thank you very much for listening, and wish you a happy afternoon and weekend. Thanks, guys. See ya.